RBI holds steady on rates amid controlled inflation. The Monetary Policy Committee maintains the repo rate at
5.25% while projecting a benign inflation outlook of
2.1% for 5.26 coupled with new liquidity and consumer protection frameworks.
The Reserve Bank of India's Monetary Policy Committee has opted for policy continuity, leaving the key repo rate unchanged at
5.25% for this review cycle.
This decision is anchored by a downward trajectory in headline inflation, which is now formally projected to average
2.1% for the fiscal year 2025-26.
The central bank's stance reflects a balancing act between sustaining growth, momentum, and ensuring price stability, with core inflation, excluding volatile food and fuel, holding steady at approximately 2%.
Concurrently, the RBI announced significant regulatory measures, including a proposed framework for customer compensation on fraudulent transactions and guidelines to curb mis-selling, signaling a parallel focus on financial system integrity alongside macroeconomic management.
The convergence of global resilience and domestic stability, a favorable external backdrop and robust domestic food supply chains create the conditions for a prolonged pause in the monetary tightening cycle.
The RBI's decision is contextualized by a remarkably resilient global economy in 2025, driven by trade front-loading, fiscal stimulus, and accommodative policies abroad, which buffer India from external shocks despite persistent geopolitical risks.
Domestically, the critical factor is food inflation management.
The MPC notes strong food supply prospects underpinned by a healthy curve outward, adequate buffer stocks, and favorable RBI sowing conditions, which are expected to continue moderating food deflation and anchor overall price stability.
This combination of benign external pressures and controlled domestic supply-side factors provides the MPC the necessary headroom to prioritise growth support, making an immediate rate hike unnecessary and a cut premature until inflation sustainably aligns with the 4% medium-term target.
Liquidity surplus and regulatory expansion as policy tools. Active liquidity management and a suite of new consumer protection rules represent a nuanced, multi-pronged approach to financial system stability.
Beyond the rate decision, the RBI is actively deploying liquidity and regulatory instruments to steer the economy.
Systemic liquidity has remained in substantial surplus, averaging Rupee 70,000 crore since December 2025 and swelling to nearly Rupee 2 lakh crore in February 2026.
In response, the central bank conducted multiple durable liquidity augmenting operations in recent months to ensure orderly market functioning and transmit its policy stance effectively.
In a significant shift towards enhanced consumer protection, the RBI proposed a framework to compensate customers up to Rupee 25,000 for losses from small value payment frauds and issued draft guidelines on mis-selling and recovery practices.
Furthermore, aligning with the union budget, it plans a regulatory framework for corporate bond derivatives and total return swaps, deepening the country's financial markets.
A prolonged pause with a cautious eye on future easing. The current stance sets the stage for sustained growth in interest-sensitive sectors, with future rate cuts contingent on inflation firmly settling below the 4% target.
The strategic verdict from this MPC meeting is one of watchful stability.
The unchanged repo rate, projected low inflation and surplus liquidity environment are expected to sustain demand in rate-sensitive sectors like real estate, where industry leaders have welcomed the pause as a boost to buyer confidence.
The forward guidance remains cautiously accommodative. The door for future rate cuts is not closed but is strictly conditional on inflation durably aligning with the target, requiring continued monitoring of food price volatility and global commodity shocks.
The introduction of robust consumer protection frameworks concurrently mitigates systemic risks and builds trust, suggesting the RBI's policy toolkit is evolving to address both macro-financial stability and micro-level consumer welfare in a maturing economy.